Let us now experience such computation, maybe 3 questions, small computation. The moment that is for 5 minutes, 15 minutes, we can also leave. 3 questions are target, understood? You can see the question, but 2 lines, 3 lines question. Question number 1, 2 and 4. Okay, va. 1, 2 and 4 pa. 3. Please sir. Then settle down. Please settle down. A purchased a machine on higher purchase terms. Cash down being rupees 14,000. The term of credit is 3 years. Of the term, the first installment is payable at the end of first year. The rate of interest agreed at 16%. The rate of interest is agreed at 16%. The principal, this line is not there, strike off. The principal amount shall be paid equally. Find out installment value for year 1, year 2 and year 3. Cash price is rupees 50,000. Also find out higher purchase price. So please listen, pa. Sir, please stop talking. Given. Let's identify what all information given. They have given cash down. Rupees 14,000. Let's see what is the order of information. Cash down. Adukapra what they have given? Term. Term also given. 3 years. Then what they given? First installment is payable at the end of first year. Okay. Interest rate 16%. Then this is an important fact. Repayment of principal equally. Then they have also given cash price rupees 50,000. They are asking you what should be the first installment, second installment, third installment. Then they are also asking you what is the HP price. So 4 things they are asking you to find out. Everybody? Now can you visualize the first entry? What is the first entry in the books of purchase? Asset debit. How much amount? Cash price, okay, but how much amount? So asset account debit 50,000 to bank 14,000 to hire vendor 36,000. Which means what is the principal amount? This is the amount on which you should calculate interest. Clear? Now one more fact is that the principal of 36,000 will be paid equally. Which means each time the installment when you will pay, that will include principal of 12,000, 12,000, 12,000 is the fact given in the question. So thereby, now listen carefully, sir. Please listen carefully. Let me take the computation. End of year 0, year 1, year 2, year 3. Payment. I am dividing into interest, principal, installment. Then I am having principal outstanding. Everybody? At the end of year 0, I understand there was no payment happening. On this date only the loan was taken. And the loan is actually taken not for 50,000. I had cash 14,000. So I have taken the loan for 36,000. And this 36,000 is nothing but principal. 50,000 minus 14,000. Cash price minus cash down. Correct? Now interest at the rate of 16% for the year 1 will be charged on 36,000. 5760. Are you all following? Yes, sir. I want your attention rather than copy. Listen, try to understand it. Ui. So it is 5760. Now listen, I know that principal should be repaid equally. So thereby the first installment should be 12,000 rupees towards principal and 5760 towards interest, and thereby it is 17,760 I will pay. And after this transaction, what is the principal outstanding means? It is not 36 minus 17,760, it is 36 minus 12,000, 24,000. Or if you see the accounting wise effect, don't copy listen, try to understand it. We don't create, or we are not having writing championship. Please try to understand the problems. Now accounting wise what we will do is, we create this principal. Everybody? Yes, interest due entry. At that time the liability gets increased. 36,000 plus 5760 and we repay the installment. Understood? And that way also you can get 24,000. Principal plus interest minus installment. Understood? Or from principal you are repaying principal 12,000, balance is 24. Is that clear? Yes, sir. Year 2. Interest will be charged at the rate of 16% on 24,000. 3. And this is 15,000. Everybody? Yes, then we will charge interest at 16% on 12,000. So what we understand is, they are asking you to calculate installment value for first year, second year and third year, and these are the amounts. Everybody? Installment of first year, second year, third year. Principal of 12, 12, 12 with respective interest. That interest gives you that principal. Understood? Now they are asking the fourth computation what? Higher purchase price. There are two ways to express. It is cash price plus interest. I can total this interest. Can you total the interest? 11,000 plus cash price. What is cash price? 50,000. Thereby it is 61,520. What price? Higher purchase price. Understood? Or installment value plus down payment. Installment value means first installment, second installment, third installment together. 47,520 plus down payment 14,000. 61,520. In any way you can arrive at. Are you following this? Everybody, quickly take down. Okay, settle down. Entries in the books of hire purchaser. Next part. Completed this? Okay, so please settle down. Friends, settle down. Stop talking. Entries in the books of hire purchaser. Please make out the entries. Entries in the books of hire purchaser. Missionary account debit. Missionary account debit. Missionary account debit, how much? 50,000. Missionary account debit 50,000. To bank 14,000. To hire vendor 36,000. So missionary 50,000, to bank 14,000, to hire vendor 36,000. Year 1, please listen. Interest account debit to hire vendor 5760. Then we have, so which means what happens? 36,000 after this first entry will become 41,760. After charging interest, liability increases. Now you repay the installment hire vendor to bank. 12,000 illa. 17,000. This is what you pay. So thereby 41,760 minus 17,760. Again the principal will become 24,000. Please respond. But accounts will be having effect like this. You had a principal of 36. You charged interest. Respond. So thereby it has become 41,760. You paid how much? So 41,760 minus 17,760. Now it will become 24,000. Please respond. One more entry I want you to make is that this interest will be transferred to P&L. Interest will be transferred to P&L. In fact, one more entry will come in the examination if they give depreciation rate. If they give depreciation rate, the depreciation will be charged by the purchaser. Because asset is shown in our books, no. We will be charging depreciation on which amount? 50,000. So depreciation to asset, machinery, the percentage on 50,000. And even that depreciation also will be charged to what? P&L. So that will be a common entry. P&L to interest to depreciation. In the examination we are visualizing other entries. If they give what rate? Depreciation rate. Shall we proceed? Now year 2. Interest to hire vendor. 3840. Hire vendor to bank. 15. You have P&L to interest. 3840. Year 3. Interest to hire vendor. 1920. So interest due, installment pay. Interest due, installment pay. These are routine entries that we will be having. 13,920. Sir, in the examination, should I make all these entries? Not necessary. This much is sufficient. The question is actually computing certain things. And you compute this, you prepare the table and finally jot down the answer like installment of first, second, third, this much, and HP price this much, over. This is only for, since we are learning the chapter initially, we would like to learn the entries also simultaneously. Understood? Maybe 1 or 2 questions until it becomes routine for us. Actually, the chapter will have routine entries only. Understood? So the same entries again and again. Once we fed up the entry, we will not be proceeding with the entries. We will do only computations. So next, P&L to interest. How much? 1920. 1920. Our 3 problems target reduced to 2 problems only. We have only 2 problems. I'm giving happy news, telling sir. Now please listen. Oh, you want more question, huh? Okay. Yes, please stop talking. My dear friends, please stop talking. I won't take another question at all. But this accounting entries has got an alternative way of accounting. That alone, this entries alone I will just rearrange. With that we are just putting an end. Understood? Now please listen. Alternative accounting approach. Computation remains the same, no change in computation. Alternative accounting approach. Using interest suspense. Using interest suspense. Everybody? See, we know that. Sir, please stop talking. We know that higher purchase price is actually how much, pa? 61,520. Is that clear? Listen, pa, my dear friend, the blue shirt. Last 10 minutes, listen to the concept, my dear, beginning to the chapters. So listen carefully. Afterwards, once you understand the basic concept, even if you are not listening, it's okay. But during the introduction part of the chapter, please listen. So, when we find that the HP price is 61,520, this is a legal contractual liability, correct? So thereby, I actually want to show the higher vendor amount at year 0 to higher vendor as 61,520. I want to show liability as 61,000. So machinery debit 50,000 only, because that will never be more than dash price. But this is a contractual liability. I will show at 61. Even though as on today, what is payable is only 36,000. In fact, it is not 61,520. I am sorry. We have to bank. Same doubt, na? That's okay. To bank, we had a payment of 14,000. So 61,520 is a total liability. In that 14,000 is already paid. So to higher vendor, it is 47,520. But actual principal today is only 36,000. We computed interest not on 47,520. We computed interest only on what amount, sir? 36,000. Correct, apa? But my contractual liability of future, in other words, I have to pay in future these 3 installments. It is contractually signed by me. Yeah. So thereby I have to pay 17,760, 15,840, 13,920, total of which is 47,520, which is my liability. Understood? Now this liability is arising because of the interest, which does not belong to 1 year, it belongs to 3 years. Thereby I book this as interest, but the moment I book this as interest, people misunderstand this as a nominal account and transfer it to. So I want to ensure this is not treated as nominal. So thereby I use a word called suspense, interest suspense, 11,520. What is the entry, sir, now? Machinery at dash price. Machinery at interest suspense to the extent of total interest. Credit bank to the extent of, and to higher vendor, which will be the balance, which is nothing but HP price minus down payment. In the first approach, higher vendor, what, sir? Cash price minus down payment. In the second approach, what, sir? HP price minus cash down. Could you appreciate that? Now what happens? Please listen carefully, my dear. What we do is, to book interest at the end of first year, we need to simply transfer from interest to interest. This is recognized as an asset. And simply transfer from interest suspense to interest. Because liability we need not increase, because liability is already increased. So when you repay the installment, simply make the entry higher vendor to bank. Simply make the entry. So when you book the interest, liability will not increase further. Correct? Liability is already, interest already booked in an account called. Now from that interest suspense, transfer to interest. Entry will be interest debit to interest suspense. What was the interest? 5760. Everybody. Installment payment entry remains the same. What is the entry? Higher vendor to bank, 17,760. And this interest what you booked is a nominal account, which will be charged to what? P&L account. It is P&L to interest. How much? 5760. Sir, ultimately effect is what, sir? Same. P&L entry will be what, sir? P&L interest will be how much amount? Machinery shown at 50,000. Are you following? Liability shown in the balance sheet at corresponding asset is, if you actually net this off, 36,000. Are you following? Same effect but in a different approach we are doing. Understood? It is not different computation. Interest will be computed on 47,520. Yeah? No, 36,000 on the reduced amount only. So computation is the same for both the type of accounting. Correct? Respond. But entries will differ. So here what is the entry? Interest to interest suspense. Hire vendor to bank. P&L to interest. Correct? In fact, these two entry remains the same. Just one entry only changing. Instead of interest to hire vendor, instead of interest to hire vendor, it is interest suspense. Out the entry. Now repeated entries. What is that? Interest to interest suspense. So by crediting interest suspense is increasing or decreasing. And over the 3 years it will be automatically eliminated. Correct? You booking interest. 3840. Hire vendor to bank. 15,840. P&L to interest. 3840. Year 3. Interest to interest suspense. 1920. Everybody. Hire vendor to bank. 13,920. P&L to interest. 1920.